And welcome everybody to Wealthwise. It's me, your host, Jordan Kimmel, and you see her again. You see her on TV a lot as well. It's Mish Schneider, and she's the chief strategist over at Market Gauge. And thanks so much for joining us again.
Thank you so much, Jordan. It's a pleasure to be here.
Well, it's the first day after the summer. People are back at their desks. The market is rotating once again. Let me set this interview up with I love the article that you had in the newsletter Pro Investor Insights. I never really heard of this idea of the modern family, which I'm going to ask you to share. And on TV right now, you hear it's the Magnificent Seven or the 493. And I'm thinking there's a whole lot of other ways to look at the market. And please share with us. I'm going to ask you first about the modern family, and then I'm going to ask you how the family's doing.
Okay, well, the family does, by the way, have a tech component to it because Sister Semiconductors is one of the members. So essentially, just to give a little very brief history, my background has a duality in it in that I have a master's in special ed, which is how I started out life. And then I went down to the commodities exchange, worked there for 14 years. And then I kind of kept my hand a little bit in special ed because what I did was I was an inclusion specialist, which simply means that I wanted to help take some of the most disabled kids and keep them mainstream. And so in that, I modified curriculum a lot, mainstream curriculum. So when I started to work more out of commodities and into equities, it was just sort of the way my brain works that I needed to create some kind of a modification, not just for myself, to get how the whole economy and the stock market work, because I'm not a business degree, but also to be able to explain it to other people, because I found myself in this position as chief strategist for Market Gauge, right, which went to the retail space in the early 2000s. So that's kind of the background. And as I started looking around, I realized, yeah, NASDAQ's great and the S&P 500 are great, but they come under a different umbrella in terms of really measuring the U.S. economy because of stock buybacks, because of huge capitalization, because of international presence. And so I wanted to look at what really represents here, and that's where small caps became the grandfather or the granddaddy of the U.S. economy. And there have been many people who have said to me, yeah, but it has nothing to do with the tech boom, small caps. And that's true to a certain degree. But eventually what I've discovered is that if the small caps continue to either falter or do not participate in a rally, at some point tech looks back and goes, wait a minute, because it's the ultimate indicator if the economy is shrinking or possibly going into recession or what have you. And then, of course, the second other huge part is consumerism, right? The U.S. is the hugest consumer, and that's 70% of our GDP. And I remembered my grandmother very fondly, couldn't walk very well until she went into like a department store, and then all of a sudden she tore
became
up those
spry.
eyes. Yeah. And so I made Granny Retail sort of a model after my own grandma. And those two alone are the grandma and grandpa. And then all the others kind of fit in over time. So transportation, a little bit of the old Dow theory, semiconductors, as I mentioned, biotech, because it's a highly speculative area, but also a non-cyclical and cyclical. Regional banks more than big banks, because that measures the real rural aspects of the U.S. And I also capped it off lately, or more later, I should say, with Bitcoin, who I call my tween, because it doesn't really know what it wants to be yet when it grows up, but it's definitely in the family. And I think that pretty much wraps up the whole family. I don't know if I left anybody
Right.
out.
No, but the point is that people will create a pie chart. They'll call it small cap, large cap, mid cap. They like to define the market if they can as value versus growth but the whole idea is that there are times in the economy when different sectors lead and different industries will lead. Even though we know tech gets bigger and bigger and bigger and encompasses more and more, people forget that, in fact, semiconductors are cyclical too, and they're subject to big downdrafts. So here's the thing I'm going to admit, it's kind of an odd thing. I'm more of a stock picker, so that's what I focus on. But I can't tell where we are even in the cycle.
Mhm.
Whether this is it looked like the beginning of a new bull market again, but now it really looks like there's a rollover in recession. So tell me, maybe by your group behavior, the family behavior, can you tell me where you think we are in the economic cycle even? It's hard to figure out.
It is hard to figure out. And what I see in the family right now is if we step back and we look a little bit longer term, is that everything at this point, having a 3 to 5% correction is not necessarily the end of days. And you got a lot of scary stats out there about September. September really is horrible. And then even worse in an election year, it's the end of September into October. So, strap on your seatbelts because we're going down. Other people saying, oh man, we're going to really crash. We're going into major recession. This is worse. I've seen people say worse than 2008, worse than 1929. I'm like, this is really where you have to kind of, and retail environment, the retail investor, I should say, has increased exponentially since COVID. So you have a lot more people and eyeballs on it. So you get the herd mentality even greater with these sort of knee-jerk things. So we get all of that hype out of our heads. I mean, it's big of you to admit that it's difficult right now because it is. However, if you just kind of step back, you see, let's talk about retail. Retail is down today as you and I are talking and sort of flirting with a 50-day moving average. But at the same token, it's not that far from its 2024 highs. So the question is, was this just a normal correction? Or are we really going into that seasonality blah? We don't know that today, but we will know that, I think, in a couple of days. And the same thing with the small caps. They're down, but they're not that far from the highs. And then biotech, which looked like it was going to explode, has just kind of come off because, again, speculative money, so people liquidate. It's the semiconductors that have had the biggest correction. And what we've been saying is that a rotation more into the U.S. economy probably is likely regardless of who wins the election because of things like reshoring and tariffs and the need to be able to use our own natural resources, which we're so rich in. So semiconductors, all it has to do is stay in the game, right? It doesn't necessarily have to rally to new highs anymore, and it probably won't for a while. But we don't want it to collapse either, because that, as you mentioned before, it's cyclical. That tells a different story. And then we'll wrap it up with transportation. So if that's actually doing better than it was pretty much in 2024. Right now, it's hanging on. It's on over its July highs. So what is that telling you? Not quite as bad as people are saying. And then, of course, regional banks, which looked like they were dead last year.
Are the number one group suddenly?
Exactly. So, what? So here's your rotation. This doesn't look like the end of days to me. It does look like we're seeing some regular type of just liquidation all over, including gold and silver, by the way. And unless something really horrible happens from here, I don't see anything that has changed economically. It's more, I'm still looking at the stagflation scenario, not
Right.
recession, maybe stagnation. We're already seeing that. And prices in certain areas are still relatively elevated. And I think that we're more stagnant than the inflation part, but that could all switch too once the Fed starts cutting.
Right. Well, so, I hear what you're saying. And let me say this. Over the weekend, I like to think it's a beautiful weekend around here. And I looked at, we get our monthly numbers where every stock gets a new ranking. And I looked and I looked. And, Mish, I actually see this concept of infrastructure build out and onshoring as the dominant theme coming up. But I will tell you something. The market is giving me a big fat, you don't know what you're talking about today. The whole idea that I do, though, is understanding what you're buying. Not a matter of, I'm not buying moving averages. I'm not buying moving average crossovers. I'm buying companies, and I'm trying to buy them at the right level. So what I'd like to do here is I want to take a real quick break. I'd like to actually keep you on a little bit longer. Can we keep you on for one more segment?
Oh, sure.
Okay, so let's take a real quick break. I'm getting something in my ear saying we need to go to a sponsor. We'll be right back with Mish Schneider right after this break. And welcome back to Wealthwise with me, your host, Jordan Kimmel. And this is Mish Schneider, and you've seen her on TV several times. You see her in her newsletters. She's kind enough to actually offer us an article in the Pro Investor Insight and then embellish what we're thinking about. So, Mish, I give you a lot of credit. I loved your last article. We talked about the modern family, but now I want to do something else because investors, the people who watch this show, are not dollar cost averaging for the rest of their life. They're trying to be a little tactical.
Right.
And so now let's come out from your old commodity trading days. Tell me what you're doing in the net, or what you think you might do, or the tactical moves that you would make if you didn't want to be passive, but you wanted to take advantage of something that you see around the corner.
So I have two real outside of commodities, which of course you have to really time yourself well in that area. Buying strength in the metals has been terrible. Buying weakness has been much better. So let's leave the commodity space and go to two areas that I'm so keen on for 2025. Number one is, we talked about granny retail. So we know the staples obviously has been doing a lot better than the discretionary. But also what makes so much sense to me is how the consumer habits have shifted. Coming out of COVID, people spent money on everything. Let's travel. Let's go to restaurants. Let's go to Disneyland. Let's do this. Let's do that. Let's buy the kids clothes. Let's upgrade our homes. And now reality has set in. Savings rates are down. Credit card debt is up. But what's happening now is we're getting a new area of consumerism. And I'm calling it, we're going from we to me, or the vanity trade, right? And I know I'm not alone in this because obviously all these diet drugs for obesity are going to make a bigger and bigger impact as they get better cost-wise. So, obviously GLP-1 and Wegovy and some of the others. But what does that mean, right? So if you take a huge percentage of American consumers who all of a sudden lose weight, what are they going to buy in 2025? Well,
New clothes? New clothes? What new clothes?
Well, let's start with the face. So you know what happens when you go from obesity to thinness is your skin, right? So number one is there could be a lot more in terms of cosmetic surgery. So if you look at a stock like AbbVie, which does Botox and injectables, that stock is flying right now. And then if you look at skincare and makeup, well, even though we've seen e.l.f. go down, Coty go down, I was buying Ulta, and then Warren Buffett came in and bought almost 700,000 shares of that stock. He obviously sees something there as well. And then if we work our way right, once, what do people see most, right? They see your hair, they see your face. Once we get through people trying to improve that and buying more stuff that they may have never bought before, like makeup, and getting their skin taken care of with skincare, then we can look at athletic clothes, because these people who never took a hike in their life feel better. Maybe they finally do buy Nike sneakers or some kind of other type of athletic shoe. So I'm looking specifically at those stocks. I've been watching those stocks. We are actually involved in some of those stocks. And that to me is my buy and hold. Okay. And I'm not much of a buy and hold type of trader, but I feel like the downside's limited and the upside's great.
I love the ideas. I think they make a lot of sense. They're also in that kind of sweet spot where people can go out and buy that. They may not want to go out and buy that new super expensive car. They may not want to, something else, but they can, they can always buy the $200, that $300 item that makes them look even a little bit better. Hey, I love the idea. I'll challenge you on one thing on the way out. And I'm just curious. Sometimes when you really are right, and AbbVie is super high quality, so there's no question it goes down. You might want to buy more. Some other things are more speculative. From your old trading on commodity days, you said buy and hold. Is there any technical points where even your best ideas, you just raise your hand and you say, maybe I'm wrong, and my buy and hold turned into a buy and take a small loss before it becomes a huge loss? What do you think of that?
Yeah, I actually, of course, always use risk parameters. We never just buy, because I'm not buying for myself only, although I do have my own trading account. I trade for the clients of Market Gauge, so I have a fiduciary responsibility to not get them hurt. So I do have parameters. So let's take one of the stocks. So Coty. And I think Kardashian sort of represents the ultimate vanity trade, right? I mean, you can't get more vain
Is
than to
she
be
public?
Kardashian. So I bought Cody. I actually bought more on the way down. And
Okay.
now if it takes out the 2024 low, I'll get out because
Okay.
it's
And
telling
that's
me
the
that my
point. That's
timing
the
is wrong.
whole point. I'm
Right,
just bringing that up because you
right.
know what? It was Lucent, that was everybody's technology stock. There was Lock Solid. It
Hmm.
did go from 80 to 1. You don't know what's going to happen. Companies like Bethlehem Steel, Pan Am, they're no longer in business. So I remind people, not only do you have to be patient, but you have to be diligent. And when at a certain point the growth stops and the trend comes negative, you don't need to go down with the ship, right? You really don't.
Absolutely, absolutely. And I mean, just like let's go, let's move to the other area that I'm really keen on for 2025, because you mentioned Lucid and electric cars and expensive cars. So one of the things in technology, and I was just asked this on Yahoo Finance on Friday, do you think the tech has a lot of upside? And I said, well, not the classic chip tech like we've been seeing, but I think the technology is going to change back to infrastructure, like you said. And used cars of EVs have gone down in price because there was such a glut,
Right? Yeah,
so
right.
much that people are actually buying used EVs now more than they're buying used gas-powered cars. And one thing you know and I know is everything is cyclical. Everything. Nothing is not
Yes.
cyclical. I mean, we are cyclical, right? We were born and then we die. And so it's the same thing. So basically I'm looking at, well, Tesla, I think is really a hot stock for 2024, 2025. There was good news came out on it today about they're still delivering to China. So somehow Musk gets through the tariffs. And I'm really looking at some of the American car companies that do have the hybrids and also have this glut of EVs, and then the battery technology that goes along with that. I think that's going to make a comeback in 2025. I do. So we have a small position in Rivian as one car that I think we're looking to get. We're in Tesla. Actually, we are in Tesla through the quants, but I'd like to add to that on the discretionary. So that's my second thing I'm looking at.
Love it.
Which is
I love
totally
it.
separate.
And folks, Mish didn't say what she's looking at for 330. She said what she sees coming, wants to get ahead of the trend and builds positions as she's validated, and then uses risk control where you're not. That's a
Exactly.
professional. That's a
Right. I mean,
professional.
I've been looking to buy old energy, but I can clearly see the trend is so terrible in TAN, for example, which is the ETF and for solar
Yeah.
energy. I won't touch it. At some point, though, it'll give me the signal and I'll get in and I'll have my stop.
Keep watching it, keep your finger on the pulse. And that's really what a quant, a technician does. And it's what professionals do. They build watch lists. They don't randomly just see something and buy it. They look and they watch. Hey, Mish, we do need to wrap up. It's really a pleasure. We're going to count on you for another article for the Pro Investor Insights. It's a delight today. And folks, you can see now the difference between someone that is doing